How you guys doing? Welcome back. Today's lesson 30, the intro and the broader scope of fundamental analysis. We actually already covered technical analysis and of course making a trading plan. That's why we do in fact have our little building here. I'll zoom in so we can see we have our trading plan wall here that's going to keep you safe for when things get rough, and we also have our first 1/3 of this wall for technical analysis. The goal is you're going to take your trading system and put it inside that trading structure that keeps you safe. Fundamental analysis is 1/3 of the analyses I would do for every single trade that I take. So today we're going to cover some really good stuff and then dive deep into these separately in different lessons, but today we have quite a lot to go over. It's going to be weird for some of y'all with no charts really. We're going to have a few charts, but we have a lot of websites to go through. Let's go through these, check them out, and see what fundamental analysis you can do to get yourself better at researching and actually finding the quality of tickers and stocks and businesses you want to invest in. So first today is, what is fundamental analysis? There's definitely some confusion where you think that due diligence and fundamental analysis are the same thing. They are different, but in very slight ways. Fundamental analysis is a part of due diligence. Due diligence includes fundamental analysis, but again, fundamental analysis is based off of factors like spreadsheets, quantitative, qualitative analysis. It's about the money and the actual earnings and the statistics of that business. Due diligence includes everything we talk about, right? So let's not get that confused. But we're going to talk about what is fundamental analysis and how it can be applied to swing trading, day trading, and scalping, all those kinds of things. Today and then in a future lesson, how do you use professionals, right? You and I don't have our CFP degrees, most likely, our licenses, but how can we use people who do to our advantage, right? How can we use hedge funds? How can we use professional investors? All these people, CEOs that we like, how do we use them? We have price targets, analysts, bloggers, insiders, news, and even again, hedge fund activity. All those can be used. We'll cover that today briefly. Next, we're going to cover catalysts in this unit, but let's cover today quickly. What is a proper catalyst? What does it actually mean? How do you find one? How do you use it? How do you trade off of that? All those kinds of great things. We'll discuss volume, volatility, regulations, world events. We're going to talk about earnings, hedge fund movement, pharma plays, upgrades, downgrades, all those kind of great things. We'll touch on these today and then dive deep later into this lesson. Fourthly, what numbers, what letters, what categories do I care about fundamentally? Right? Do you care more about PE ratios or EPS ratios? Both work, but which one means more? We'll talk about that. How about ROAs, ROIs, and ROEs? What's that mean? We're going to cover all these things that I use simply off of FinViz and things that you can do. Takes 10 seconds for each to give you a better edge in investing and trading. We'll talk about that in this unit as well. The fifth lesson, gravitational forces. Being someone who's a big nerd for macroeconomics myself, the business cycle, GDP, what month it is, affects gold, silver, basic materials, industrials, farming. It affects a lot of things that no one talks about. Interest rates, inflation, what industry and sector it's in, what about the growth of the country. All these things matter when you're investing and trading stocks, obviously. So we're going to cover that as well in this unit. But for today, let's get a nice brief overview of all this, and then we'll dive deep more into these later. So just so you know, we have 4 lessons after this one. Today we're going to cover the real bare bones of what it is. We're going to get some great websites and some great resources for you, of course. But we're going to cover next lesson, again, using analysts, then catalysts, actually stocks and ETFs, numbers I care about, and then gravitational forces. So 5 lessons in all for fundamental analysis, but lesson 30 is our first one. So y'all, let's get into it. So what is fundamental analysis? I think the most basic definition that anyone can understand is, what is a company's value examined through certain lenses, including economic and financial factors. What things can we do to say this company over here is overvalued and that one over there is undervalued? Because you don't have any kind of consistency how you're going to properly do this. You can't tell me Apple's oversold and then Tesla's overbought, but then Amazon's a fair price, but Google isn't, without having actual stats and data. The issue with a lot of beginners is they don't understand that data means more than emotions and data means more than conviction. A lot of times your beginner traders are going to want to go in on every short squeeze they see. They want to go in on every single big play that runs up pre-market. If the fundamentals didn't change in the long run, you're just buying a equity higher than it was before, and you're getting FOMO. You're buying in a momentum that isn't there, and you're going to get burned in the end. So fundamental analysis is all the things that help you properly value a company you're going to trade off of and invest in. Of course, if you're scalping, you're probably not going to care all that much about these kinds of statistics with quantitative and qualitative research. But if you're going to be doing swing trading and long-term investing, it really does matter. We'll look at that today. So we're going to cover in depth a few websites over quantitative and qualitative research, and then we're going to go through some special points for the next lessons to get those covered as well, so we have an idea of what we're going to be going into. But let's go ahead and talk about quantitative research real quick. So first we're going to look at quantitative data. Quantitative, like money, numbers. Quantitative implies there's numbers and data being used. Qualitative, which we'll talk about next, is non-number things that matter. So let's start our journey on quantitative knowledge with Tesla. I'm going to use Tesla because it's a lot of examples. Everyone knows about Tesla. It's an easy example compared to maybe like a $50 million pharma play that's not nearly as in-depth as this. So again, I am cherry picking using Tesla, but again, it's a really good example. Let's check it out together. First thing we're going to look at is the balance sheet. You can find almost any ticker's balance sheet on yahoo.com or any website that you do like. A balance sheet is simple. The only reason I use a balance sheet is to make sure the assets are higher than liabilities and their incoming capital is higher than their debt. If you have any idea how to budget and use money and how to make passive income or investment income, you would know that a company or yourself, you want to have more assets and asset generating wealth than your liabilities, aka the balance sheet is here to show you that they make more money or they spend more money. Let's check out Tesla and see what it shows us. We can see clearly from 2017 to 2020, our assets have gone from 28 million to 52 million, almost doubled. That's great. You can click the down arrow and you can definitely kind of look at more in-depth things. Again, for a beginner, I'm not overly worried for you guys to really dive into like, oh, well, what's their total non-current assets? It doesn't matter for a beginner, right? You can definitely follow up on that. This is a great intro for you. Liabilities has also gone up, but again, it's not nearly as high as we see our assets improving, and we can see our equity gross difference. We have, again, 5 million, so we had a nice margin of $5 million profit, 5.7, and now 23. So you got to ask the question, why did Tesla go from being $7 million in a difference, now $23 million, with such heavy assets coming in? Again, that's part of the journey, is to find out why. We'll look at that in a little bit, but again, we can see growth is happening in Tesla. We have clear assets over liabilities. That to me is a strong sign for a long-term swing or an investment. We can also see our total capitalization is higher than our total debt. So we have more money, way to go, than we do our debt. Now, there's some companies, there's a lot of arguments that debt's good, and I don't think that's incorrect. Debt, you can borrow money from a bank. If you have a great credit score or company, maybe you get a 4% APR rate, and then that's way less than paying taxes on the money sitting here or paying taxes on making more money. That's the fact of the matter, that some debt's actually pretty good because you can use margin leverage to then use that to make more money. If you have a friend who real estate invests, they know what I'm talking about. So we have a good looking balance sheet here. Let's check one more time. So we can see clearly assets over liabilities, total capital over total debt. Delicious. That's the first part of quantitative research, is our balance sheet. The second is the income statement. This is very similar to the balance sheet, but it's a little bit more in depth. Let's check out Tesla together really quick. Again, total revenue is really important. That's how much money they're going to bring in. Again, 11, 21, 24, 31. They're kind of making some good moves. Again, they're increasing. That's good. Their cost of revenue, again, has increased as well. But again, that margin has always stayed positive. That's good. We have a 2 million profit all the way up to 9 million profit. That's really good. If you wanted to, of course, go into the expenses, see what they're doing. Oh, they're spending money on research and development. I like that. They're selling general and admission. I like that. You know, they have some interest coming in. You got to look into that maybe. Their tax provisions. I mean, you look, EPS does matter. You want EPS to be positive. That's going up. That's good. Again, you can go into all these kinds of things. As a beginner, there's no real reason to go in here and go crazy and try and be like, well, let's check out their basic average shares, blah, blah, blah. You know, you can get to that as you get better. Let's build this structure first that we're working on, and then we can get into more in-depth stuff. The income sheet should be used the same exact way. Are they making more money selling stuff or doing their product or service than they're spending on producing it and marketing it, taxes and debts? Obviously, Tesla has that. There will be companies that have negative EPS, that have